Australia's financial watchdog is tonight scrutinising the banks over concerns mortgage holders are being ripped off.
Is your bank shortchanging you on the money you keep in your offset accounts? Right now, ASIC is investigating Australia's $307 billion mortgage offset market, and the findings could be a shock. These accounts are sold as a smart way to cut years off your home loan and save thousands in interest. But what if they're not delivering what you think? What if the banks are quietly pocketing more than they should, and borrowers like you are the ones paying the price? In this video, we're going to take a look at the issue, why it matters, and what you can do about it. So first, what are offset accounts? An offset account is basically a transaction account linked to your home loan. Usually, it's a variable rate loan. Here's 9 News showing you how they work.
More than 3 million Australian households have a mortgage, and more than half of those feature an offset account. Now, the idea is that your extra savings offset the outstanding balance on your home loan, meaning you pay less interest. Used correctly, an offset account could save you thousands of dollars a year.
Let me show you an example. Say you have a mortgage of $500,000 and an offset account with $50,000. In this case, the interest on your mortgage is calculated on a $450,000 balance, not $500,000. This works better than a savings account in several ways. First, you get a better return. A savings account might offer 1, 2, maybe 3% a year. With an offset account, as you're effectively reducing your mortgage, you're saving a mortgage rate closer to 5%. Second, taxes. A savings account earns interest income, whereas an offset account reduces an interest expense. It's a double negative essentially, but one that doesn't result in taxable income like a savings account would. And third, liquidity. Increasingly these days, banks have a lot of rules to stop you taking money out of a high-interest savings account. Term deposits are locked up, and accounts with special interest rates have a lot of rules to get access to the higher rates. With an offset account, you can use it like your everyday account, moving money in and out with no rules attached. So what's the issue? Let's hand back over to 9 News.
9 News can reveal tonight corporate cop ASIC thinks there might be a big problem.
We've heard in some instances the banks have not connected the offset account to someone's mortgage account, and that's bad for the consumer, but we're not sure how widespread that problem is.
So essentially, ASIC are concerned that bank customers might not be getting the savings benefit that they were promised. Bank errors are being cited as a core issue, but with bank earnings and stock prices peaking in 2025, people have a right to be suspicious. So in such cases, the banks haven't been connecting offset accounts to mortgage accounts, meaning the customer is missing out on potentially thousands of dollars of savings each year. Beyond just the financial loss, we trust the banks to do right by us. Not all of us are finance gurus, maintaining Excel spreadsheets to calculate every cent. There is a huge trust factor that banks calculate things correctly, apply fairness in what they do, and we trust regulators to take action when the banks don't live up to that moral code. Luckily, in this case, the regulator is taking action, launching a surveillance program across 8 banks, including some of the Big 4. There is strong evidence to suggest if there is an issue, and indeed it is widespread, they will seek refunds for customers.
Our expectation is that when things have not been properly done, consumers are remediated.
That means refunds. For how many customers? Well, the investigation could take a year to find out.
So if you have an offset account, what should you do? Firstly, check your statements from the bank. Do the installments look correct? If you are unsure about interest, you can calculate this by taking your principal, multiplying this by the number of days between payments, and multiplying that by your interest rate divided by 365. Usually, this is the formula used by banks to calculate interest. On your offset account, try to determine where your interest savings are captured on your statements as well. You can also try calling your bank just to double check your offset account is correctly linked to your mortgage account.
In the meantime, the advice is to check your statement carefully. And if in doubt, ask your bank to confirm if your accounts are linked.
If you found this video useful, drop the word taxes in the comments so I know you made it to the end. If you want to pay down your mortgage faster, click this video here to see several actionable tips you won't find anywhere else. As always, don't forget to subscribe, hit the like button for the algorithm, and I look forward to catching you on the next one. Cheers.